Yo, what's up everyone? It's February 5th, 2025, and AI just keeps getting wilder. We've got a ton of headlines to get to today, and stay till the end for funny AI-generated images of animals in the winter wonderland. As well as today's top 3 AI tools and 3 ways to make money with AI. From international governments taking action against certain AI companies to major players in the tech world making big moves, the AI landscape is shifting quickly. We're talking Alphabet's earnings, Microsoft's hiring spree, and even the UK's stance on Chinese AI. And let's not forget the ever-present DeepSeek, making waves again with its disruptive tech. Oh, and we'll also dive into how AI is changing the game for investors and content creators alike. So, if you're ready to get your daily dose of AI news, you've come to the right place. We're breaking it all down, unpacking the details, and giving you the insights you need to stay ahead of the curve. Let's get right into it. First up, we're heading over to Australia, where things just got real for DeepSeek. The Australian government has officially banned the Chinese AI company from all its government systems and devices. That's right, a full-on ban, citing national security concerns. Now, this isn't the first time DeepSeek has faced scrutiny. We've seen similar moves from Italy, Taiwan, and even the United States, all raising red flags about privacy and security. It seems like Australia is taking a page out of their playbook, prioritizing national security in the digital age. The big question is, what does this mean for DeepSeek's global presence? Are other countries going to follow suit? This ban definitely sends a strong message, and it'll be interesting to see how DeepSeek responds. This is a developing story, and you know we'll be keeping a close eye on it. But for now, let's just say, DeepSeek's got some hurdles to clear in the land down under. So, is Australia's move a sign of things to come? It's hard to say for sure, but it definitely points to a growing trend of governments taking a hard look at DeepSeek. We've already seen concerns about data privacy, potential bias in their algorithms, and even the possibility of their technology being used for surveillance. Now, DeepSeek has maintained that they operate ethically and responsibly, but these bans suggest that not everyone is convinced. It's a complex issue with a lot of factors at play, including international relations, economic competition, and of course, the ethical implications of AI. What's clear is that AI is no longer just a tech issue, it's a geopolitical one. Governments around the world are grappling with how to regulate this rapidly evolving technology, and DeepSeek is finding itself at the center of that debate. We'll have to wait and see how this all plays out, but one thing's for sure. This is just the beginning of a much larger conversation about the role of AI in our world. Alright, shifting gears now to the financial side of things. Alphabet, Google's parent company, just released their earnings report, and it looks like they missed the mark. They reported revenues of $96.5 billion, which, on the surface, sounds massive, but it fell short of Wall Street's expectations. Now, this isn't exactly a disaster for the tech giant. I mean, they still saw a 30% increase in cloud revenue, which is nothing to sneeze at. But it seems like even Alphabet isn't immune to the growing pains of the AI revolution. With competition in the AI sector heating up, companies like Microsoft and, yes, even DeepSeek are putting pressure on Alphabet's dominance. It's a tight race to the top, and every percentage point matters. CEO Sundar Pichai acknowledged the challenges during the earnings call, emphasizing their commitment to AI development and promising significant investments to bolster their capabilities. So, while this quarter might not have been their best, Alphabet is clearly not backing down from the AI fight. So, what does this mean for Alphabet's AI strategy going forward? Well, it looks like they're doubling down. Pichai made it clear that AI is a top priority, and they're willing to spend big to stay competitive. We're already seeing them integrate AI across their product lineup, from search and advertising to their cloud platform and even self-driving cars. And with the recent push from competitors, you can bet they're working even harder to push the boundaries of what AI can do. Now, Alphabet has a history of innovation, and they've got some serious resources at their disposal. They've got the talent, the data, and the infrastructure to make some serious waves in the AI space. It'll be fascinating to see how they leverage these strengths to tackle the challenges ahead. Will they acquire promising startups? Will they focus on developing groundbreaking new algorithms? Or will they take a more collaborative approach, partnering with other industry leaders? So, we've talked about some of the challenges facing big tech companies like Alphabet in the AI space, but there are also some companies really benefiting from the current AI landscape. Palantir Technologies is a prime example. They've been making waves recently, and it seems like investors are taking notice. What's interesting about Palantir is their focus on using AI to make their existing business more efficient, rather than trying to build the next big chatbot or image generator. They're all about leveraging AI for data analysis and decision-making, and it seems to be paying off. This approach highlights a key trend we're seeing in the AI world: the commoditization of AI models. Basically, the cost of actually using these powerful AI models is going down, and that's opening up opportunities for companies like Palantir, Snowflake, and even Salesforce to integrate AI into their core products and services. It's a classic case of a rising tide lifts all boats, and in this case, the rising tide is affordable, accessible AI. It'll be interesting to see how Palantir continues to capitalize on this trend, and what it means for their long-term success in the AI game. Now you might be wondering, what's driving this decrease in AI costs? Well, one factor is the development of more efficient AI models that require less computational power to run. Think of it like the difference between a gas-guzzling SUV and a sleek electric car. Both can get you where you need to go, but one is going to be way cheaper to operate. Another factor is the increasing availability of cloud computing resources, which makes it easier and more affordable for companies to access the massive computing power needed to train and run AI models. It's like the difference between owning a professional-grade camera and subscribing to a cloud-based photo editing service. This shift towards more cost-effective AI is great news for businesses and developers, because it means they can start experimenting with and implementing AI solutions without breaking the bank. It's like the early days of smartphones when app development exploded because the barriers to entry were relatively low. And just like we saw an explosion of creativity and innovation in the mobile app space, I think we're going to see the same thing happen in the AI world as these powerful tools become more accessible to a wider range of people. It's no secret that Microsoft has been making some serious moves in the AI space. They've been pouring resources into their AI research and development, and they're not afraid to go after the best and brightest minds in the field. Case in point, Microsoft's AI chief, Mustafa Suleyman, recently recruited several key personnel from Google DeepMind. Now we're talking about some serious AI brainpower here. DeepMind is known for its groundbreaking work in AI, from AlphaGo to AlphaFold. These new hires are expected to contribute to a range of projects at Microsoft, including the highly anticipated next generation of the AI-powered Copilot. If you haven't used Copilot yet, it's basically like having an AI assistant built right into your workflow, whether you're coding, writing, or even designing. This is a clear signal that Microsoft is committed to building out its AI capabilities, and they're not just interested in playing catch-up. They want to be the leaders in this space, and they're willing to put their money where their mouth is. So, what does this mean for the future of AI assistants like Copilot? Well, I think we can expect to see some pretty significant advancements in the coming years. Imagine an AI assistant that can not only help you with your work, but also learn your preferences and anticipate your needs. We're talking about AI assistants that can seamlessly integrate with all of your devices and services, providing a truly personalized and intuitive experience. Think of it like having a personal Jarvis from Iron Man, but hopefully less likely to try to take over the world. Microsoft is also investing heavily in areas like natural language processing and computer vision, which will enable AI assistants to understand and interact with the world in even more sophisticated ways. We're talking about AI assistants that can understand your emotions, read your body language, and even hold a conversation that feels completely natural. It's an exciting time to be following the development of AI, and with companies like Microsoft investing heavily in this space, I think we're on the cusp of some truly groundbreaking advancements. Alright, so we've talked about DeepSeek getting banned in some countries, but the plot thickens. In a surprising turn of events, the UK's Science Minister Lord Valance recently came out in support of DeepSeek, suggesting that the UK could benefit from the Chinese company's AI technology. Now this is a pretty big deal, considering the ongoing tensions between the US and China, especially in the tech sector. Lord Valance argued that the UK needs to be open to innovation from around the world, especially in a field as competitive as AI. He also pointed out that DeepSeek has been making waves with its recent AI models, which have been recognized as some of the most advanced in the market. So it seems like the UK is taking a more pragmatic approach, prioritizing technological advancement over geopolitical concerns. This move highlights the complex landscape of AI development and regulation. It's a global game, and different countries are going to have different priorities and approaches. The UK's stance on DeepSeek raises some interesting questions about the future of AI development and the role of governments in regulating this rapidly evolving technology. On the one hand, there are valid concerns about national security and data privacy, especially when it comes to companies like DeepSeek that are based in countries with different regulations and values. On the other hand, there's also the risk of stifling innovation by creating barriers to entry for companies that are pushing the boundaries of AI. It's a delicate balancing act, and it's going to be interesting to see how different countries navigate these challenges. One thing's for sure, AI is going to continue to be a major point of contention and collaboration on the global stage. We're already seeing the formation of international alliances and agreements focused on AI, and I think this trend is only going to accelerate in the coming years. It's a fascinating time to be following the development of AI, not just from a technological perspective but also from a geopolitical one. Buckle up, folks, because things are about to get even more interesting. Alright, so everyone's talking about AI assistants these days. ChatGPT, DeepSeek, Grok, you name it. They're everywhere, promising to revolutionize how we work, create, and even think. But how do these AI heavyweights actually stack up against each other? In this corner, we've got the reigning champ, ChatGPT, known for its crazy reasoning abilities and ability to generate some seriously creative text formats. But it's not all sunshine and roses. ChatGPT can be a bit of a slow thinker, especially when you're waiting for those complex responses. Then, we've got the newcomer, DeepSeek, coming in hot with a more conversational tone and a knack for understanding different languages. It's quick on its feet, but it tends to shy away from controversial topics. We'll see if it can hold its own in this battle of the bots. And let's not forget about the other contenders like Grok, Gemini, Claude, and Meta AI, each bringing its own strengths and quirks to the table. It's a crowded arena, and the competition is fierce. Now, we all know these AI assistants are impressive, but they're not perfect. One of the biggest challenges is bias. These models are trained on massive data sets, and if those data sets aren't diverse and representative, it can lead to some seriously skewed results. We've also got to talk about accuracy. While these AI assistants can generate human-quality text, they don't always get their facts straight. They can hallucinate information, make stuff up, and that's a problem, especially if you're relying on them for important tasks. Another area where these assistants are still evolving is emotional intelligence. They can mimic human conversation to a certain extent, but they lack the empathy and understanding that comes naturally to us. It's that human touch that's still missing. And finally, there's the question of control. As these AI assistants become more powerful, it's crucial to establish clear ethical guidelines and regulations to ensure they're used responsibly and don't fall into the wrong hands. The AI world is no stranger to shakeups, but DeepSeek, a Chinese startup, has really turned heads with its latest move. They've managed to develop a cutting-edge AI model at a fraction of the cost of what tech giants like Microsoft and Alphabet are used to spending. This cost-effectiveness is a game-changer. It means that AI development, which was once the exclusive playground of these mega-corporations, is now becoming accessible to a wider range of players. This has sent ripples through the industry, causing some serious concern among investors who are seeing the market value of US AI leaders take a hit. It's a classic case of disruption, where a smaller, more agile player comes in and shakes up the status quo. But DeepSeek's impact goes beyond just shaking up the market, it's sparking a crucial conversation about the future of AI development, and more importantly, AI regulation. DeepSeek's success is forcing everyone to rethink how AI is developed and who gets to control it. With their cost-effective model, they've demonstrated that you don't necessarily need billions of dollars and massive datasets to make significant strides in AI. This opens up a world of possibilities for smaller companies, startups, and even research institutions to become major players in the AI landscape. We could see an explosion of innovation as more players enter the field with fresh perspectives and novel approaches. However, this also raises concerns about the potential misuse of AI. With easier access to powerful AI tools, it's crucial to establish ethical guidelines and regulations to ensure responsible development and prevent malicious actors from exploiting these technologies. The rise of DeepSeek is a wake-up call for the entire AI community. It's a reminder that the future of AI is not predetermined. It's a future that we're actively shaping with every decision we make, every line of code we write, and every regulation we put in place. The world of finance has always been about information. Who has it? Who can access it fastest? And who can make sense of it all? Well, the game has officially changed because AI is now sitting at the head of the table. We're talking about algorithms that can analyze mountains of financial data in the blink of an eye, spotting trends and making predictions with a level of speed and accuracy that humans just can't match. This isn't science fiction, it's happening right now. It's estimated that over 90% of investment managers are already incorporating AI into their decision-making processes. They're using it for everything from analyzing stock performance and evaluating market sentiment to managing risk and optimizing portfolios. This means that the way we invest, the way companies are valued, and even the way markets behave are all being fundamentally transformed by the power of artificial intelligence. So, how exactly is AI changing the investment game? Well, one area where it's making a huge impact is in quantitative investing, also known as quant trading. These are strategies that rely heavily on mathematical models and algorithms to identify investment opportunities. AI is like giving these quant strategies a turbo boost. It can process massive data sets of historical market data, economic indicators, and even social media sentiment to identify patterns and predict future market movements with remarkable accuracy. But AI's impact goes beyond just number crunching. It's also being used to analyze alternative data sources, like satellite imagery to track foot traffic at retail stores, social media posts to gauge consumer sentiment, and even weather patterns to predict commodity prices. This ability to analyze and extract insights from unconventional data sources is giving investors a whole new level of insight into market trends and company performance. It's like having a crystal ball, but instead of magic, it's powered by algorithms and data. Alright, so we've been talking about AI making waves in various industries, but there's a flip side to this whole AI content creation boom. We're seeing a massive influx of what some are calling slop, basically AI-generated content that's flooding the internet. Think about it, articles, videos, even music, all churned out by AI at a pace humans could never match. On the one hand, it's pretty mind-blowing how quickly AI can generate this stuff, but on the other hand, it's raising some serious concerns. First off, it's becoming harder to separate the wheat from the chaff. Finding genuinely creative human-made content amongst a sea of AI-generated stuff is getting tricky. And then there's the issue of authenticity. When you can spin up an article or a video with a few clicks, it devalues the effort and creativity that actual people pour into their work. Plus, it makes it even easier to spread misinformation if you're not careful about the sources of this AI-generated content. Now, I'm all for tech that pushes boundaries, but this whole slop situation has some real implications. For creators, it means they need to find ways to stand out, to prove their work is the real deal. The human touch is more important than ever. And for all of us consuming content, it means being extra vigilant about where our information comes from. We need to develop a more discerning eye, questioning what we see and read online. It's not about shying away from AI altogether, but about approaching it with a healthy dose of skepticism. Fact-checking, cross-referencing, and supporting creators you know are legit, those are going to be key in this new landscape. Ultimately, the responsibility lies with both developers and users to ensure AI is used ethically and responsibly. The technology itself isn't inherently good or bad, it's how we choose to use it that matters. So, you've probably seen the ads, make passive income with AI. Let AI build your online empire. Sounds pretty tempting, right? Startups like Faceless.video and Autoshorts.ai are banking on that, offering services that automate content creation and posting, specifically for platforms like TikTok and YouTube. The idea is simple. Feed the AI some keywords, maybe a few style preferences, and boom, it spits out a video ready for the masses. No need for fancy cameras, editing software, or even showing your face. For anyone looking for a side hustle or dreaming of becoming the next big influencer, this seems like a no-brainer. But hold on a second. While the tech is undeniably impressive, the question is, does it actually translate into meaningful revenue? The reality is, building a successful online presence takes a lot more than just churning out content, even if it's AI-generated. See, algorithms on these platforms are getting smarter by the day. They're not just looking at the quantity of content, but also the quality, the engagement, the human element. Sure, you might get some initial views from AI-generated content, but to really gain traction, you need something more. You need a unique voice, a perspective that resonates with viewers, a connection that goes beyond the algorithm. And that's where things get tricky for purely AI-driven content. Without that human touch, without the passion and personality that draws viewers in, it's easy to get lost in the sea of sameness. So while AI can be a powerful tool for content creation, it's not a magic bullet. Success still requires creativity, strategy, and a genuine connection with your audience. And that's a wrap on today's AI and tech news. From government bans and corporate shakeups to the rise of AI-generated content and the quest for the perfect side hustle, it's clear that the world of AI is anything but boring. It's a rapidly evolving landscape with exciting possibilities and some serious questions to ponder. As always, staying informed is key. So hit that subscribe button and turn on notifications for AI News Network, your source for all things AI and technology. Until next time, stay curious.